What is up, everybody? Today I'm making a strategy sort of upgrade video, really. I've posted a few times my edge on YouTube, and I've actually got a few people telling me that it works really well on crypto in Forex, and I'm showing that it works really well on the Nasdaq. Check out the video I made before this on how I made over $3,000 trading this strategy using just two minis. Um, on Thursday, the 22nd of February. This video is coming out the next day. I'm going to use today's trades as well on how I did that. I'm going to give a real quick overview of what my edge is. This is the 800 tick chart on the NASDAQ. This is the 50 EMA. It's the only moving average I use. And my strategy essentially is using previous areas of support and resistance, waiting to see if price can hold that level. And once I've got once I've been told, hey, look, buyers have come back in, I'm waiting for that strength. And then once I've got back over the 50 MA, looking for them to pull back to 50 MA, and we get that move. I will take my first piece off for 1-to-1. So I think this was getting in at 30, risk into the lows here. So my first target is 1-to-1. You can see it very easily does that. And then my second target is 1-to-3. Once I've hit 1-to-1, I move my stop to break even. Sometimes I'll move it a little bit out of profit, so sort of like maybe a couple points, down here. It just depends on where my entry is. If I've got an entry of say like 51, I might move the stop to 49, or if I've got an entry at 102, I might move it to 99. Those sort of things. But it depends a lot on what kind of trade I'm in. So that's the base of the strategy. The reason it works so well is if you kind of like just zoom out here, and quite often you will see when we are trending in one direction, price sort of always pulls back to the 50 EMA and holds it. We get this very strong uptrend. We tagged 50 EMA once, twice, move. We tag it here and we move. If we look at any day where we get a clean trend, we can typically see that we're tagging the 50 EMA and selling off, tagging, selling off, tagging, selling off, tagging, selling off, tagging, selling off, and same kind of to the upside as well. So the 50 EMA is just a very, very powerful indicator. What I'd suggest if you're trading something different, put it on and see what time frames it works best on. Some people find it works really well in the 1 minute as well for this. I know that in Forex, maybe it works well in the 5 minute, who knows? But that's the whole reason behind it. All I'm waiting to see is once I confirm strength, and then once they've got that confirmation, I'm looking to get a pullback to the 50 EMA. However, we've got some additions to that, because if that was the strategy, it would be a little bit too simple. And one thing that I know SMB Capital talk about a lot is that you need a simple idea behind the strategy, but you need to have different conditions to when you make adjustments. And this is one of the upgrades I've made recently. I think I've mentioned this before. It's going to lead into the next step as well. So first of all, I have my situations, and I have perfect, legitimate, and passable situations. And these will dictate what types of trades I'm looking for. To start off with, we have a perfect situation. This is when we have a trap, particularly at high of day. I don't like this as much on when we come into a support area, just because they trade slightly differently. I find that when we come into a support area, it's met more by people buying, rather than when we come into a resistance area, we're met by people buying and failing to move higher. So this is more for shorts. But when we have a very clear level and we get a very clean trap over it, so we tick two boxes, clear level, clear trap. When we have that perfect situation, what I'm going to be looking for is opportunities to potentially bend the rule slightly. And the reason for this is we actually see a bit more aggressive follow through a bit earlier. So a really good example of that was actually on Thursday, where we have here a very clear level, high of day, and we've had a very nice period of trapping. This is a period where I can imagine a lot of people would be trying to buy this. We've broken out of this. We've broken over this. There's a lot of people buying this thinking we're going to the moon. Nvidia earnings came out yesterday. We're ripping. We're making new all-time highs. Fine, it may well do. But when it doesn't, we can be fairly confident we've got a lot of longs who are trapped in this. And that means we've got a lot of stops that could get taken out and a lot of panic selling. And that means that sometimes we don't get the opportunity to come back to the 50 EMA. So once we have this clean move through the 50 EMA, I'm waiting then. Ideally, we do get a flag back to the 50, but in this instance, we don't. And instead, we get this 4 bars of consolidation before taking out the low. And that low also coincided with a lovely whole number of 30. So I can imagine a lot of people's stops were there. So this would be the entry. We very clearly get to that 1 to 3, or 1 to 1, and then 1 to 3 as well. There was a little bit of slippage on the entry here. We might have missed on the 1 to 3. I think when I looked at it, it was really close if there was slippage, but we didn't in this instance. So in other words, when we have that perfect trap situation, we can bend the rules very slightly. We don't have to wait for that 50 EMA tag. Now that's great. That's, it's going to allow us to get involved in more opportunities where our edge is really high. I'll bring up one other example of that because we had a really clean one here. This was for reference on Friday the 16th of February. So we had a very, very nice trap at high of day. This is kind of like in between two, legitimate and trap. I can imagine a lot of people buying, especially on this move here. This is a prime trap kind of type setup. So I'm now a little bit more inclined to look for shorts a bit early. However, if we bring over our chart again, we're under horrible conditions. And when we have horrible conditions, the last thing we want to do is get into a trade early. We really want to wait for a bit more of a break. And this is actually a pretty big upgrade I've made to prevent as many poor signals. In other words, when the price action is that sideways choppy nothingness, you can't just take a random trade. You've got to wait for something more like this, where we clearly break away from the 50 EMA. We've broken that structure a little bit, and then when we get in, it's just a bit of a safer entry. So in this instance here, we get that trap, but because we've got this horrible choppy price action, I'm not going to be taking a trade here. Instead, I'm going to wait to see us get that clean strength. And I'm also aware that anybody who bought up here, their stop is probably going to be somewhere around here, around this 45 area. It's not a surprise, spoiler alert, when that got taken out, we got this incredibly big, quick move. So in this instance, we get that move away from the 50 EMA. We've got that strength. And again, we've got 1, 2, 3, 4 bars, a nice little flag, an opportunity to get in probably at 44.50, giving us like about 11-point stop. Very quickly goes to our first target of 1 to 1 and goes to our second target of 1 to 3 pretty comfortably as well. So that's kind of like both of those little upgrades, I suppose, when we have perfect trap situation, but also when we have horrible conditions. Now, legitimate situations is when we have a clean level, double bottoms, double tops, but maybe we don't get that trap. And this is actually where I'm going to bring in this next upgrade that I've got, which I think is a bit easier to explain here. So there are two trade routes that I look for. Route number one, and this is the one that I would encourage if you are going to look at this strategy, look at this first. This is the easy route, and this is a very simple, kind of like tick it off kind of thing. Is the level clear and obvious? Yes, only. Now this means this has to be a level that's either the high of day, the low of day, the pre-market high, the pre-market low, or a level that is very, very clear. Do we have a trapping element? Now, if this is yes, we can do what we were just looking at in terms of getting in a little bit on those consolidation breaks. If no, we're just looking for a normal setup, okay? And is the day as a whole supporting our side, which is going to come in a little bit more important next? Doesn't really matter if it's a yes or a no in this instance because we've got a very clear setup. We know that our edge is in play. In these situations, we are looking for any clear setup that we have no doubt on it. In other words, when we get a very clear and easy opportunity, we'll just go back to today's play. I think is probably the best one. Yeah, we'll go back to today's. So when we get we have that, really nice high of day, very clear. Yes, we've got some trapping, just looking for a normal kind of setup. Okay, come into this low here, very clear support area. Yes, we're just looking for normal setups. These are easy trades. These are the ones that I developed this strategy off of. They work at, like I said, around about 70, 75, 80% accuracy rate or win rate. They give an overall return of around about 1 to 1.3. It's an incredibly profitable approach. You can just do that and make a lot off of it. The key is, of course, is to consider conditions. If conditions are horrible, if they're choppy, just wait for a slightly better setup. The next trading route is the hard route, and this is one that I think takes a bit more time to develop. It's definitely more of a feel element to it, but we can still break it down into a bit more of a black and white roadmap. So we have a trapping-like feeling. Okay. Now, when we get that, and what I talk about when I talk trapping, I mean when you feel like there are traders who are trapped. It's that sort of like this just has the perfect feeling that this should be going higher or it should be going lower and it's not. Now, sometimes I don't always think this is trapping. Sometimes I think this is the point where if one side is going to come in, this is the point where they need to come in. And if they're unable to do that, then the other side is showing clear strength. Okay. Now, if we get this sort of feeling, this kind of situation, you don't want to be looking all the time for this, but if you get this, like, this is a critical moment and it should be going lower and it's not, if you get that kind of feeling, then what you need to begin doing is you need to begin asking yourself, is there some kind of level that we can feel that's in play? I don't like taking trades when there isn't any kind of level because I feel like we're kind of stabbing in the dark as to whether there's support and resistance there. So instead, I want to at least be able to go, you know what? I can put this level on here and I can definitely get behind it was previous support or resistance. Now, if you've got that and it's a bit like, I'm not certain on this, we can also ask the question, is the day supporting our side? And what I mean by that is you need to kind of take a slight step back and assess the whole day and go, does it make sense that the vast majority of traders are going to be on this side? An easy example of that is if we're uptrending, then yes, we can look for longs. If we're uptrending, we probably shouldn't be looking for shorts unless we've got a really clear trap at high of day. And even then, like, a good example would be earlier on today where it was like, this kind of feels like it could be trapping, but you don't want to be shorting on a day where it's this strong. Like, it just, no. Even up here, like this was a legitimate trade signal, but this is pretty strong. If this wasn't such a clear level, I would not be looking for a short in here. But it was a clear level, so it was a short and whatever. Now, if we have this, if we can go, okay, I got that feeling we should have headed lower here and we didn't, and I can put a level on and it makes enough sense, and I can go, ideally, yeah, I can get behind this trade in terms of I think there'll be a lot of people, following in this thought process. Then what we want to do is we want to wait for a very clear strength signal before we take an entry. What does that look like? I'm going to show you right now. So I'm going to pull up an example from today. We had this situation earlier on today, and this was the best trade that I took on this day here. If you want to see the recap, I did that, but essentially you can go for it now anyway. We have a level here that in the moment when it came down here, I thought this is where we're going to really roll over and sell off. Okay, this is definitely something that, yep, we've taken this out. We're about to roll over. This is the moment. This is the moment where everybody who's long is going to get out of it and shorts are going to come in. When that failed to happen, it sets off alarm bells going, hang on, this should have just gone. Okay, it doesn't necessarily feel like a trap in this instance, but we get that same feeling of this should have gone, this is a trap, okay? So what we want to do is we want to put this level on and we want to just begin asking ourselves, is this a level I can get behind? And for me, I'm bad with this sometimes and go a little bit over the top. If you can draw a box and in that box you can see multiple areas of support and resistance, you're probably good to go. So I've drawn a box in here and we can see, okay, it was a previous area of resistance here and then it got above it and held it. In here it was pretty much the area where it broke down. In here we had our resistance area. Even here we had this resistance area. Okay, fine. This is probably passable. Now, are we in a situation where I can get behind going long and I'm going, yeah, I absolutely can here. If we sort of step back and think about this for a moment, we had some very bullish news after hours yesterday, which was Nvidia earnings. We are in an incredibly strong bullish market. We've had this pullback, but we've still been very, very strong. We can see that, since November, we have been in this very strong uptrend. It wasn't that long ago that we were having days where you could hardly get in on a trade because it was just going straight higher. Combine that with the fact that we tried to take out this high twice, failed, and when we rolled over, we didn't continue. This is something that you'll see quite often. We put in this double top, it fails, and then it rolls over. There was another day as well that was perfect for it. Here, we rip higher, puts in a bit of a double top, rolls over. Here, we push higher, puts in double tops, rolls over. The fact that we haven't done that is a pretty good indicator that, hey, there's a lot of strength in this market. So I can now go, okay, we've got a trappy-like feeling, or an area where it should have gone and it didn't. That area was also a previous kind of level. And I can be pretty confident that we should probably be on the long side here. So we're ticking all those boxes. Now what we need to do is wait for a clear signal of strength. And that clear signal of strength was, we got over the 50 EMA and we were just strong. Like, this is just pure buying. This for me is telling me, okay, we've got this clear daylight. If we look at this, we've got this really nice period here of, like, this is a lot of daylight between price and the 50 EMA. That's really nice. So as a result, we can begin looking for a long, and we just then take the same principle. We want to wait for a really clean hold of the 50 EMA as well, which we got here, and we can see very clear 1-to-1, and then a nice push. And this would have been a little bit of a painful one to hold through because it did come down, almost stop us out for break even, but it did end up going to 1-to-3. So let's have a look at a few more of those examples. So we had on Friday the 16th, we had one of these. So after we had this, attempted rollover, and this is pretty much what I said before. Okay, we put in a bit of a double top. This should be rollover. We should now just sell off into the lows, right? And we end up getting above the 50 EMA. And what I will typically find is that we get this move and we cross back over 50 EMA, and all of a sudden I go, damn, this feels like it should go higher now. Sometimes you get it after the fact, like, and this would be one where you go, oh, this should have rolled over. It's a shame there's not a level there. But if we put a line in here, at this low here, we can actually see, and if we draw our box in, we can actually see, even all the way back here, was this an area of previous support and resistance? Well, it absolutely was. Even back here, it was the first mini bounce that we had on the big sell-off. It was a resistance area here, resistance area here, resistance area, and when we got over it, we actually came back and we held it, and we held the area again. So we've now got a passable level. We've got a really nice W pattern here, right, where we come down. Okay, it's kind of like a inverse head and shoulders. So got a nice price action that feels like this should have gone. This should have flagged and just sold off, and it didn't. So now, can I get behind this? Well, let's have a look. We've got this low here and this low here. And if we match them up, we can see we're actually holding this uptrend really cleanly. So again, we can tick all the boxes and we can go, we've kind of got an okay level at a point where I felt it should have rolled over and we had that trapping. And we are holding the uptrend on the day, which is an indicator that the day is supporting this. So yes, we can begin looking for an opportunity to get in. Now in this one, we didn't get that really clean move higher, but look how nice this hold of the 50 EMA is. We get above the 50 EMA at 124. And if you haven't used tick charts before, by the way, each one of these candles is not the same amount of time. It's the amount of ticks in that candle. So, we get above at 134. And we're still holding above it. We haven't closed below it at 133, 134. So 10 minutes where we just hug the 50 EMA. So we now have a really nice period of consolidation. And this just looks incredibly strong. And we can pretty comfortably go, you know what? If we take out the 50, if we take out the 40, the 17,840 again, there's a pretty high chance that we can really get ripping here. So, let's say we got in, 41.25, and we said, okay, I'm going to give it down to the 30 mark. So we're giving it what? That's 11.5 points. Target one hit very, very easily. This is 7 minutes you're in the trade for. A little bit long, but it is what it is. And then 1-to-3. Again, like this would have been a little bit later on, but it's quite easy to hold a position when it's just going up, I suppose. So these are the upgrades that I have made, and the reason I've made these upgrades is I have found threefold. One, I found a period where the market was incredibly difficult to trade, where it was just chopping back and forth, back and forth, back and forth. And when you get that chop, it becomes, you get a lot of false signals, right? You get a lot of, oh, well, this, look at it here. I mean, we've just put in, we've just put in a rejection of the high of day. We should be looking for a trade here, and maybe we'd have got involved somewhere in here for a short, and it just didn't work. And then later on, like, we could have taken a short early in here and we'd have got stopped out. And then, Yes, the next one happened to work, but would have been stopped out for break even on our second piece before the big move. There was potentially a long in here as well where we held an area of support. We could have been easily saying we could have been long in here somewhere. Would have been not a particularly bad trade under my old approach. But having the upgrade of identifying when we have horrible conditions waiting for this kind of move has reduced the number of these false signals that I get. And you can even see on this chart here, there are a lot of potential trades that could have been taken. If you pause it and have a look, like there's a lot of potential errors. There's even one that I took, the second trade on this chart, even the first one. This is difficult conditions. We shouldn't really be trading it. So that was the first reason. The second reason was I was finding so many situations like this where it's a slam dunk that this is going to sell off. There's such a high probability that we're going lower because of the rejection area, the multiple trapping. I mean, this beautiful attempted break that traps. This is like, if we begin selling off, there is a really high probability that we're going to come down and test the 800. That's a 50-point move that we want to be a part of. But sometimes we're not able to actually get involved in it, right? Because we don't get that 50 EMA tag. And then finally, when we have these situations here, again, I've been having trades, and this bit comes with intuition, where I've been having times where I go, this feels perfect. Like, this is exactly what I want to see, but I'm unable to take the trades, often because, again, I have rules, and I think it's really important to stick to rules. But there's sometimes where you go, this is just absolutely perfect. This is exactly what I want to see. And yet I'm not going to take it because of my rules. And what I learn is that, sometimes we get this price action down here that we get when I have a perfect support hold, like we had here. Not taking advantage of that feels a little bit criminal. So what I've tried to do with these upgrades is I've tried to bring those feelings, like the hard markets. It was hard to really describe for a while what they were. When you work on them and you work out, oh, this is horrible conditions, okay, put pictures to it. And now I know what it is. So now I've got a black and white rule. When I've got these harder setups where I'm like, this feels perfect, but I don't really have rules for it. And the problem is when you don't have rules in place for like a setup where you go, this is it, it becomes very hard to actually execute it. A really good example was actually the other day. Let me find the right one. It was in here, where I have a rule which is I don't want to be trading after 3 p.m. I don't think there's enough momentum most of the time. But when we have a perfect trap situation, right? We have this, and this was like as clean of a trap as you can possibly get. Okay? We have the perfect trap. Why on earth would we not take the short opportunity? This is like such a high probability that we're going to get a move that it's criminal not to take advantage of it. But if you have a rule, no trading after 3 p.m., which is, for me, it's a valid rule purely because, for me, on the days where on most days, it gets to 3 p.m. and normally we've already had the move, or we're just grinding higher, or we're just running out of volatility, or we're middle of the range. So I don't have very good setups. And it's also very tempting during those times to keep on looking for trades to take into the close. As a result, I didn't take this trade, I don't believe, because it's it's beyond 3 p.m. This is a perfect situation. We have a perfect trap at a key level. It gives a clean break. It rejects a 50 EMA. It gives a nice move. And then the next setup, and my perfect trades, I allow myself to take a couple of attempts at this, was even better. And we can see you could have been short at 904.75, risking 9.5 points. And this actually ended up going to final target. So these two trades here, these added up to about 40 points of very clear and easy value. Like these very easy, straightforward trades that I didn't take because I'm not, I had too rigid of a rule set. So essentially what I've tried to do with the upgrades is to make it more likely that I'm taking trades when we have the edge in play, and less likely I'm taking trades when I don't have the edge in play. I know this video was super long. It was more of an instructional one. I hope that if you have found value in it, that you enjoyed it and you've watched all the way to the end. I really appreciate that. So if you did, let me know in the comments down below. Leave me a like, subscribe, and I will see you in the next video.